Taste Holdings, an investment holding company with a market cap of 452 million rand, said it expects headline earnings per share to be between 12% and 19% higher than February 2011. Full-year results are expected to be released at the end of May. Well, I jumped the gun earlier on Taste. Paul, what are your thoughts around this one? Of course, the smaller player in the restaurant franchise
No, it's
chain
quite an
environment.
interesting story. It was one of the Altex listings of 2007, I think. The CEO, Carlo Gonzaga, is very young, and at the time he came to the market, he was kind of pushed into the limelight by his mentor, Trevor Edwards, who'd been successful with Eneleni and had a whole lot of fast food interests. Since then, him and his mates like Jay Curry and a couple of the other non-exec directors, Duncan Crossan, have done a good jow. I think they got talked into the National Wholesale Jewelers acquisition.
I was going to say,
which was
how
like,
on
whoa,
earth do you
where
marry
did that come
jewelry
from?
and fast
Well,
trade
at the
like
time they
St.
said,
Elmo's
look,
and Maxis?
it's all about franchise and management relationships and distribution chains. And actually, that NWJ business hasn't done too badly. It's got it like the third largest position, and it had its own independent management, and they've kind of left it alone, and it makes profits, and it's been okay. But I think the emphasis is on the food. So they've done the Scooters deal. They then did St. Elmo's in the pizza area, and they did Maxis as well, which is more exposed to the service stations on the highways. And the most recent deal is this fish and chips company, which is the one that's associated with Chabalala, the soccer player. So, I mean, it all looks good. That's about a 65 million rand acquisition. This group is 450. So it's tiny, it's small, it's kind of on the move, and I suppose it's got its own attractions.
Are you happy with the diversification there, Craig? Jewelry, Scooters Pizza, St. Elmo's, Maxis?
I think if you got Carlo with a couple of beers and asked him what happened, he would have said, I'm looking for an acquisition, and couldn't find one in the food market. Because quite honestly, it was difficult in their case to raise the finance. If you hear the story about how they got Maxis on board, it was largely because the vendor was very cooperative. They ended up paying him the last 2 or 3 million way after the day. So it was a difficult time to find acquisitions in food. And I do think he was forced into that in terms of trying to get growth. And you'd probably admit to it, as I say, over a few beers. So it's not quite the fit in terms of what I think the strategy was when they came to market. It has done well in cycles, but they purchased platinum at the right price and it ran out. They purchased gold at the right price. Now I'm concerned because we've seen both metals drop significantly. So they do manufacture jewelry, and a lot of the profits have got to do with the purchasing of the commodity price. I don't think he uses hedging, if I stand open to correction on that. But so it's difficult, and then of course in tough times people aren't spending money on jewelry. So his theory is that then they focus on the low end of the market, and it's more resilient. But I personally it would be easier to assess the company if that wasn't in the stable.
When we were chatting earlier about the pizza environment, you said it's a very competitive one. That was with our discussion with Spurcorp. Coming to further pizza players here, St. Elmo's and the likes of Scooters Pizza, how do they fare when it comes to this very competitive pizza environment? Craig?
So Scooters is very much focused on takeaway market. Pizza as a whole is very much focused on the takeaway market. St. Elmo's has got a little bit of a sitting dining experience as well as takeaway. So I think that's when one thinks of pizza, one has to think of it different to the sit-down spur environment. So there's certainly demand, and if you listen to the likes of some of the outside players, Romans comes to mind, they're saying that the black market, the emerging market, is taking an interest in pizza. And so I think it's a growing space, but a very competitive space. And what you have to do is make sure that you've got a competitive offering.
If you wanted exposure to the restaurant chain environment, would you dare to go the Taste route?
I think you could. There's an additional issue which is worth noting, and that is that margins on pizza are fabulous because it's the easiest thing to make compared to some of the effort you have to go to make dishes, higher up the food chain. The other thing is that Pizza Hut is apparently interested in coming into South Africa. That's part of the Yum Brands stable globally with KFC. And there's been talk for a while that they're looking for a way to get in fast rather than to come in and just open 1 or 2 stores. So I suppose if that were an issue, you could see some corporate action here. Although I normally never recommend stocks on the basis that there's a possible buyout.
Talking about corporate action, Craig, let's just focus for a moment. Do you think that Famous Brands could potentially buy out either Taste or even Spurcorp?
It's not impossible. I think where Famous Brands should be looking now is to try and get a competitive chicken. And Nando's are certainly not sellers. I think it's Capricorn Private Investments. They've indicated they're not sellers. So and Yum won't be selling KFC. I don't know whether, again, my comment about Famous Brands having all of these Irish pubs, which Kinko couldn't do anything with, yet they brought them from. So they've got your Kegs, your McGinty's, and O'Hagan's. Basil O'Hagan didn't make a success of that neither. So now why go and buy something else and dilute the brands? It may well be a strategy of Kevin Hedwick. Whether it's the right one is questionable.
It looks as though we're going to have to get Kevin Hedwick into the studio and put these questions to him. Taste, hot or not, Craig?
I thought it was sizzling hot at 50 cents, and I think last year I recommended it as a hot stock about 3 times, but it's run up tremendously hard in terms of the 12 to 12.7 cents estimate. I think at a 1920 PE, it's rated in line with Famous Brands, and it shouldn't be. It should be on a PE of about 16. So I think it's run a little bit hard.
No longer hot in your
It's
book,
not hot.
Paul?
I'd like to give it the same, but I'm going to go with Craig's point there that I think it's just reached a level where buying them with gusto at these levels is probably a little bit risky. So I'm going to say not hot at the current price.